Welcome to China and Hong Kong Compliance Essentials, the podcast where we break down complex cross-border regulatory and corporate structuring topics into clear, practical steps. Today's episode is focused on one of the most common entry structures for international businesses expanding into Asia, incorporating a company in Hong Kong in 2026. We'll walk through the full incorporation process step by step, highlight the key compliance considerations in 2026, and explain how firms like us, Woodburn Accountants and Advisors, simplify the entire setup through an all-inclusive incorporation package. The big question still is why Hong Kong still matters. Despite evolving global tax transparency rules and increased regulatory scrutiny across Asia, Hong Kong remains one of the most efficient and internationally recognized corporate hubs. Key advantages include the simple territorial tax system, no VAT or sales tax, strong common law legal framework, easy access to banking infrastructure, strategic proximity to China and the broader APAC markets, as well as a high credibility for holding companies and trading entities. However, incorporation alone is no longer sufficient. In 2026, regulatory compliance, economic substance, and banking readiness are equally critical from day one. The purpose of today's podcast episode is to look at a step-by-step guide to incorporation. So let's walk through the process in a structured way. The first step is defining your business structure. Before filing anything, you need to determine what's the company type. Usually, this is a private limited company. What's the shareholding structure? Will it be an individual, a corporate entity, or will it be held by a trust? What are the business activities? These must align with banking and licensing expectations. And ultimately, whether the entity is trading, holding, or service-based. This step directly impacts tax treatment, banking approval, and future compliance obligations. Step 2 is the name search and approval. You submit a proposed company name to the company's registry in Hong Kong. The general requirements are that the name must be unique, i.e., nobody has taken it thus far. It cannot imply regulated activity unless licensed, and it must comply with naming guidelines. English and/or Chinese names are optional. In fact, you can have both. Third step is preparing the incorporation documents. And the core documents are the Articles of Association, the incorporation form, which is the NNC1, the identification documents for directors and shareholders, registered office address in Hong Kong, and the company secretary appointment. In addition to all of that, the address proof of the directors and shareholders will also be required. The fourth step is the submission to the company's registry. Once filed, incorporation typically takes 1 to 5 business days, and this is the standard processing time in the 2026 conditions. Upon approval, you'll receive a certificate of incorporation and a business registration certificate that will have to be renewed on an annual basis. Step 5, and this is where most compliance failures occur, you must immediately address your corporate bank account opening, the accounting system setup, tax file registration with the IRD, compliance calendar setup, and the initial economic substance assessment. Banks are increasingly strict, particularly where there is any link to high-risk trade flows involving China. 2026 compliance essentials you just simply cannot ignore. Incorporation is only the beginning. Key compliance priorities include economic substance expectations. The authorities really expect authentic, real operational logic behind the entity, not just paper structures. There is enhanced banking due diligence, like anywhere else in the world. Banks will require the source of funds, documentation, contract flows, supplier and customer verification, as well as group structure clarity. Then there's cross-border tax transparency. Automatic exchange of information frameworks mean structures must be defensible across jurisdictions. And Transfer pricing awareness. Even small trading entities need to justify intercompany pricing if operating between Hong Kong and mainland China, as well as other jurisdictions. Now, where do most businesses go wrong? Common pitfalls include incorporating without a banking strategy, misaligned business activity descriptions, lack of supporting documentation for international trade flows, ignoring the substance requirements, and delayed accounting setup until after operations begin. These issues often result in delayed bank onboarding or compliance flags within the first 3 to 6 months of incorporation. So the biggest question of all is, how can Woodburn simplify the entire process? This is where structured advisory support becomes critical. We can all go on ChatGPT and do our research in regards to how to set up a Hong Kong company. We could even go online and do the company setup as well. However, Woodburn differentiates itself by offering an all-inclusive Hong Kong incorporation package designed to eliminate operational friction from day one. The package typically includes the incorporation of the company, offering the registered office and company secretary services, handling the business registration and filings, doing an initial compliance setup and onboarding checklist, offering to open up a corporate bank account with Arab wallets and doing the documentation preparation, and then ultimately doing a structure review for cross-border alignment with global operations. And ultimately, the ongoing compliance roadmap from the date of incorporation. The key differentiator here is not just the incorporation support, it's the compliance-ready setup designed to ensure that the entity is operationally and regulatorily viable from day one. Incorporating a company in Hong Kong in 2026 remains one of the most efficient entry points into Asia, but only when executed with proper compliance planning and banking readiness. If you are considering expansion into China or broader Asia, the incorporation step should never be treated as administrative. It is a strategic structuring decision. If you have any questions in regards to setting up a Hong Kong company or our services at Woodburn Accountants and Advisors, please don't hesitate to reach out. Our contact information is in the notes of the episode session. Thank you so much for listening to China and Hong Kong Compliance Essentials.